For years, the corporate crypto playbook was built on a single passive instruction: buy massive amounts of digital assets, lock them away, and wait. No company embodied this better than MicroStrategy. Under Michael Saylor, they built a multi-billion-dollar Bitcoin position, following a buy-only mandate that became the standard for corporate treasuries entering the space. But that buy-only mandate just changed. While their total reserve remains massive at over 842,000 Bitcoin, MicroStrategy recently sold 1,638 Bitcoin, converting roughly $105 million back into cash. The pressure came from the balance sheet. Because current accounting rules require companies to report the fair value of volatile assets, MicroStrategy was forced to post a staggering $8.22 billion quarterly net loss when the market dipped. To manage that pressure, the company used proceeds from the Bitcoin sale and stock offerings to lift USD reserves to $4 billion. This liquidity allowed them to buy back $81 million of their own high-yielding preferred stock. While MicroStrategy still holds 99.8% of its Bitcoin, this shift demonstrates that even the largest players are moving away from purely passive accumulation. To manage billion-dollar volatility, they are beginning to balance long-term holding with active liquidity. While American firms are beginning to adjust their reserves, a different evolution is happening in Japan. Gumi, a gaming and blockchain company, is building a system where the Treasury acts as the foundation for institutional tools. Their strategy centers on a single asset. Gumi has consolidated $86 million of its digital asset treasury strictly into XRP. This move isn't a simple bet on price action. It is designed to be the reserve asset for a two-pronged institutional ecosystem they are launching alongside SBI Group. Instead of holding a diversified passive portfolio, Gumi is concentrating its capital specifically on XRP. They are betting on its specific utility in cross-border payments and the tokenization of Japanese equities. By focusing their treasury on a single asset tied to Ripple's financial ecosystem, Gumi is positioning its balance sheet to capture the growth of institutional finance in the Japanese market. Parallel to that treasury is the second part of their ecosystem, the $18.3 million SBI Crypto Fund. This fund moves away from the passive model entirely. It actively allocates capital across Bitcoin and other assets, adjusting the portfolio based on market conditions to generate returns rather than just waiting for appreciation. But active management creates a massive logistical burden. Tracking micro gas fees, staking rewards, and on-chain movements is an accounting challenge that often prevents public companies from participating in the market. To address this, a Gumi-backed venture called Hinode Technologies is launching a next-generation digital asset accounting platform. The software automates the reconciliation of complex blockchain activity. This allows all on-chain data to be perfectly aligned with existing enterprise accounting software and traditional balance sheets. Once this platform is proven within the SBI Crypto Fund, it will be commercialized for other listed companies. This removes a primary operational barrier, providing the automated reporting required to meet Japan's rigorous compliance standards. The shift we're seeing at MicroStrategy and Gumi points to a unified trend. Corporations are moving past the buy and hold phase and toward active capital management. This shift is defining a new sector, digital asset treasury management, or DAT. The metric for a successful crypto strategy is changing. It is melting away from a simple count of coins in a vault and toward a focus on liquidity and the software built around those assets. The next phase of corporate adoption relies on practical integrations, enterprise-grade accounting, active management funds, and institutional pipelines that connect digital assets to the broader global economy.